Hello, and thank you for joining me in another video. And today we are once again talking about Grab stock. Now, if you've watched some of my previous videos, you might know that I've been invested in Grab for about a year now, and it's a stock that I do eagerly cover and keep very up to date on because I'm quite excited to see how this company continues to perform and grow in the future. But if you're a follower of the stock yourself, you'll know that it's not been having a good time recently. It just seems to be sinking lower and lower. And in my personal opinion, there seems to be kind of two main narratives that are causing that. In this video, we're going to be looking into what might be causing that, what's happening, and then importantly, what can we look ahead to in the future. But first of all, before we get into that, if you are new here, my name's Howard. I'm a retail investor for over 10 years now, and I recently started this YouTube channel just to discuss and share my thoughts and my research on the companies that I'm investing in. And if you're not new here, thank you for joining me again in another video. So now let's jump straight into the stock price. So as I was discussing, Grab this year has just been getting worse and worse, to be honest. It just keeps on getting hit. If we look at year to date, like a lot of software companies and a lot of tech companies, we're down 21%. Past 6 months, we're down 24%. And basically in all of these timeframes, even the 5-day, we slipped back under that $4 mark last week for the first time in quite a long time. So that's kind of the trend of the stock at the moment. And if we look at year, we're pretty much, we're down 3.5% year on year. The stock has not been getting any love. So what we're going to do is we're going to look into, okay, what might be causing this? And I think there's a couple of main things. So now, first of all, let's look at most recent. What is causing this? What's happened most recently? And it is of course, the conflict in Iran, which has recently started. You all know that the stock market in general has been very up and down because of this, because of the uncertainty that it caused, and also because of where it is in the Middle East, what it has done to oil prices. So everyone is getting very scared about how quickly oil has been going up. And essentially, oil is the cost of energy. If oil goes up, it costs more to take stuff to different places, and it costs more to produce stuff as well. That is basically going to increase prices. If you look at where that goes, it could be inflation, affects interest rates. There's a lot of stuff that is negative that comes from that. What we'll actually look to now, we've got the next area of this, which is specifically in Southeast Asia. And if we got here, this is a report. This has come from today, this morning, where the Asian markets, like the Japanese market, have already been open. Oil soared 30% on Middle East crisis, and this has directly caused a big plunge in the stock market. So we've got here, Asian stock markets plunged Monday as oil prices soared 30% on fears about supplies from the Middle East and the US-Israel war against Iran. As it goes into the second year with no sign of lighting up. So just a little bit of search here so I could get the number. But if we look here, okay, Southeast Asia, where Grab operates, how much of their oil do they get from the Middle East? And it's over 60%. They get a huge amount of their oil from the Middle East. So compared to a lot of other regions in the world, Grab operates in Southeast Asia, and Asian countries are going to be affected a lot more by this crisis because they rely so much heavily on Middle Eastern oil supplies. So essentially, if oil is going up, that is going to affect Southeast and East Asian markets a lot more. And Grab, while it's registered on the NASDAQ, it is doing basically all of its business activity inside Southeast Asia. But then on top of that, we're not just talking about any business. We're talking about a business that specifically relies on using petrol or gasoline to take goods and people from point A to point B. So this petrol and this increase in oil cost is directly going to affect Grab. One of the biggest inputs in them driving things from point A to point B, although they are looking at other, and they do have electric cars and stuff like that, they do have them in their fleet. The large majority is not done by electric cars, and oil is going to feed into that. So think about if you're a Grab driver and you either take people around, or you're taking food around or deliveries around. For you, going from point A to point B is now simply going to cost you more. Your petrol price has gone up and you're going to have to pay more for that. So what does that mean? Well, it means you're going to have to charge more for your service. Grab is going to have to charge more for you to provide that service. So that ultimately means Grab might have to be increasing their prices whilst making no more profit on top because they're just absorbing that cost. Increased prices, of course, can affect demand. People might not have as much money to take these increased prices, but they have to do it because they need to make money and keep on having a positive margin. So that is kind of where this fear, I believe, the main fear that we've had that has kind of hurt the stock price even more recently is because the effect that this is going to have on Grab. If this continues, people are already worrying and pricing in that Grab is going to have to raise its prices to accommodate for the increased price in oil. So we've got point one there, but then we've also got the next point is like, if we look into the broader market, this is the iShares Expanded Tech Software Sector ETF. So this is in general a good tracker of what our software stocks doing. You can see again, in the last 6 months here, we've got, we're down 20% in the last 6 months. And that is also with having a bit of a recovery as well. Year to date, we're down 14%. And there's been so many huge companies that have been slashed this year to date because they're in this software narrative. Lots of price, lots of profits have been taken on software. And a lot of the narrative around why this is happening is AI fears. AI is growing so quick. People are using AI to do many tasks. And people are also using AI to code and build software. Is that going to be taking away from the moat in software? And I think a lot of people are thinking this, well, this just means they can code their own versions of the app. I personally don't think it's all about these software companies are going to be put out of business because everyone will be making their own apps. But I just think it kind of puts a little dent in the armor of how richly valued software companies can be. They're seen as like undefeatable. They've got these great recurring revenues. Their profit margins increase. And this is just putting a little bit of a dent in that armor. And it's making people think maybe this isn't a perfect business model. We might need to reprice that. So we've, of course, got that going on in the valuation of Grab as well. On top of the oil price, we've also got in general software, which Grab has been taking a big hit. Now let's take a look at what should we be looking at to in the future, like what positive stuff should we be looking into. So first of all, let's have a look here. So when we've got kind of times of stock price pressure or the stock price is not going the way we want it to do, we just go and check in and say, okay, well, what is the business actually doing and what kind of signs do I need to be looking for? So recently, Physical AI, which is a really good software tool that I use, but recently did this post. The Uber of Southeast Asia has finally turned the corner to profitability. And this is the kind of stuff I think we need to be looking at. We just look at their operating margins year by year. Of course, 2025 is the first year of full positive operating margins. And again, we've got this image here just showing the operating profit. And you can see we have taken a huge curve over the past kind of few quarters. And we are now positive in the past 2 quarters. This, I believe, is what we need to be keeping a very close eye on because okay, we've got the oil price. Okay, we've got software is not being as invested in like it was before. We need to look at the operations of the business. And if this keeps on going the right trend, the operations are looking very positive. And again, the other thing we need to be looking at when we're talking about the operations of this business. So let's take a look at MTUs. So this is a very important metric to track, monthly transacting users. How many people are actually using the Grab app every quarter? And last quarter, we exceeded 50 million. We had the largest quarter ever. And that is consistently growing and growing over time. And not only that, but it's growing and we're now operationally profitable as well. We have these one kind of bear thesis you would have is that if oil is up consistently for a higher period of time and Grab has to raise their prices, maybe this will be affected. But we're going to have to keep on checking in on these metrics. I am confident in Grab's execution at the moment, and we want to see this trend continue. So that's what we need to be looking ahead on. But at the moment, as you can see from the trend is very positive. More and more people are using Grab every single month. And again, what else do we need to look at? We need to look at these revenues and we need to look at this operating profit. Revenues, again, are climbing up. We did 900 million of revenue in Q4 2025. And again, the operating profit climbed once again to 52 million. We're trending in all the right directions as Grab is continuing to execute. It's getting more customers and it's making more money from those customers. That is what we want to be seeing. So I think it's good to look into when stock prices get compressed. You need to make sure you visit the fundamentals of the company you're investing in and the thesis of why you're investing in it, because that's what you need to check in with at the end of the day. We need to making sure that these numbers are still going up, which as of the very most recent data, there are, and making sure that your thesis stays in check, which is basically not only the ride-hailing industry in growing in general in Southeast Asia, but also Grab growing inside of that. That is what I'm personally betting on Grab doing. And as time goes on, more of their competitors falling away and them getting more pricing leverage to eventually make more money. That is my thesis with Grab. So just wanted to go through. People might be panicking about the stock price, and this is kind of what I see the effects of, I think, why the stock price has been not going the way a lot of people want it to go by. This is what investing is. We can't always control the stock price, and we can't control external factors. All we can do is check in on what the data is doing. So I thought it'd be good to run through that. I hope you found this useful. And if you are a Grab investor, please let me know what your thoughts are as well. What do you think about the stock price at the moment? And do you think there's anything else that is to play at the moment? And what are your thoughts on Grab in terms of the actual performance of the business over the coming quarters? I'd really like to know. So apart from that, thank you for joining me in this video once again, and I will see you in the very next video.